Lemkin Solitaire and Equalizer seeders and planters offer disruptive innovation like vertical banding, dry and or liquid onboard fertilizer, and great prices. Go to lemkindemo.com for more information and to request a demo.
Let's talk markets here on Real Ag Radio. Joining us right now is one of the founding partners of a new firm, ICL. It is Brian Comeault. Hey, Brian, it's great to chat with you.
Yeah, you bet, John.
Okay, the markets. I guess it just get like maybe one word, one phrase. How would you describe the state of today's ag commodity markets?
I would say unknowns, or there's a lot of balls in the air as far as what we're working with as far as information that we know. So, this is traditionally the time of year where we have a lot of question marks, right? Question marks around acres, question marks around yield, all those normal question marks. But now you get to throw in, some foreign policy question marks, trade barriers, whether or not Canada is being targeted specifically on some of them. It's just kind of throwing a wrench into a lot of marketing plans. And then add to that, there's even some macro worries, recession fears, and just general economic malaise that I think is taking some risk premium out of the market, which always happens when there's a lot of things that are unknown as well.
What was your impression of last week's Stats Can report? Does anything stick out to you where you're like, I don't know about that?
Not really, actually. The wheat acre increase was a little bit larger than what I would have thought. But when you rationalize it, it does make some sense. Wheat is a more stable commodity because of the way the basis levels have been acting. It still produces a pretty decent cash price for farmers at a relatively low risk. I think that a lot of farmers in Western Canada are thinking that wheat prices don't have a lot or have less downside than some of the other commodities. So it's a bit of a safer bet. And so it's kind of understandable that those acres would rise a little bit. The canola acres, they're not too surprising as far as they're not outside the realm of normal. Just pulling up my spreadsheet here. 17 acres, 21.6, I think is what StatsCan reported.
Yeah.
So that kind of brings us to a 21.5 million acre harvested. That kind of puts us, with average yields at about 18.5 million tons of production. That does, that's kind of on the average end, I guess. We've seen some 19s in the last couple of years, but 18.5 is kind of normal. It might seem tight, actually, given some of the demand that has picked up over the last couple of years. But if we are going to see trade issues, we might see some issues with demand as well. So it might balance itself out.
Do you think it's too early for growers as we're, mid-March here, get into the back half of the month? We're not too far from putting seed in the ground for a good part of the prairies.
Yeah.
Is it too early to be like, I'm switching out of peas or I'm switching out of canola because of some of these trade issues? Or what are you thinking?
The sense I get, at least from the clients that we've talked to, which, isn't, to be fair, isn't a huge sample size across Canada, but is that the plans aren't changing a lot. And, I do think that there's probably more likelihood of a decrease in the acres than there is an increase based on what's happened. I don't think it's going to be a widespread change. Seed and rotations are decided well ahead of seeding, even in some cases well ahead of the previous year's harvest. So I don't feel that there's going to be a material difference in the acres, but if I had to be on one side of the fence, I think that there's more likelihood of a small decrease than there is of an increase.
Mm-hmm. We did on the announcement of these tariffs from China, on meal and oil, we did gap down.
Yeah.
On November canola. I guess how do we view at the time of us doing this recording, canola is like $5.91 and change. How do we view this current price relative to the issue of tariffs, the threat of China putting potentially tariffs on the seed as well, depending on how that investigation goes. Um, how do we view this? Or is it be patient, or what are your thoughts?
We are advocating for some patience. We are seeing, if we look at the nearby contract, or the one that has the majority of the open interest, we are seeing it move towards testing some longer term support. The previous year's harvest, for example, is or the harvest low from this last year is about $30 or $35 away from the close today. So that seems to be where the risk is right now. I think a lot of farmers are looking at it and saying there's a lot more upside potential. I know there's a lot of analysts kind of saying, let's step back, like no position is a position, and let's wait and see what plays out. So I think there's a lot of that going on. I don't get the sense there's a lot of farm selling happening or panic selling happening. I do get the sense that because of the rally that occurred before the tariffs in canola, that there was a significant amount of folks who added to their coverage levels over time. So I don't think that stress is there either. There isn't that stress to market and to push canola onto the system. So I think it may find some support there. It may be $20 or $30 lower than we're at today, but it might still be there. That's not to say it'll rally back to those old highs. We might be in a bit of a more suppressed kind of range going forward. And those risks, will exist. I mean, there's risks on the horizon for us as well. We may be going into a federal election here in Canada at some point. How negotiations happen with the new, the new government, whether that's Mark Carney or whether that's Pierre Poilievre or whoever ends up, winning that election. But I think once that happens, we'll be getting into some more serious, trade negotiations, whoever that is. I do think a current administration like Mark Carney coming in, I would imagine he would be, somewhat motivated to get some of these trade issues taken care of, because then he can chalk it up as a win on his, on his election campaign. So there are some green shoots, but there's also some risks. And you mentioned, that they haven't put tariffs on canola seed yet. My view is that they might be looking to do that as a bargaining chip, or kind of dangle some incentive over us, and to kind of bring us to our knees a little bit. But I think overall, I mean, maybe I'm just an optimist, but we've kind of seen these trade wars and trade issues, happen previously with the same administration in the U.S. So it's kind of, you got to make that U.S. administration feel that they've won something, or else they continue to press. So I think the negotiation will be important.
We are kind of wedged. Like
we are,
we're wedged because of the EV tariffs, that we did not make that decision in isolation, and removing those EV tariffs because we want to ship. We think it's going to help us with China on aquaculture, pork, peas, and canola oil and meal may actually upset the U.S. side of this triangle, which then really hurts canola potentially on the biofuel standpoint, just as an example. So it is very much a wedge indeed. We want to talk about wheat as well. What is going on in wheat?
Well, right now we're kind of getting into that seasonal part of the year where, it's coming out of dormancy. The crop in the U.S. is at risk. We've seen some dryness in the U.S. Midwest coming into this period of time. And then over the last couple of days, there were some really bad storms that occurred that may have caused some damage. Yesterday, there was some crop progress reports released, and the Kansas crop progress report cut 4 percentage points off of the good to excellent rating. So they went from 52% to 48%. That kind of helped the wheat market out a little bit. It's just, this is the time of year when that wheat crop is at the highest risk of damage. And particularly if, there isn't rainfall to kind of help it along. We always, kill a wheat crop in April, May, and June. That's when, we always look for our initial kind of places to enter the market for our own wheat marketing program. And I think that we're starting to see the early parts of that occurring as well.
You mentioned the opening, Canadian farmers intending to plant more wheat. Is the market signaling, hey, plant more wheat, or is that because of other crops more so?
I think it's partially, I'm not an agronomist, but I think it's partially some rotation. They've been taking wheat out of the rotation. I think it's time to put some back in. I do think it is a safer commodity as far as the volatility goes. It's a cheaper crop to grow, and margins are getting squeezed at the farm gate, and it's just a safer crop at this point in time. I think there is some upside potential based on the futures. The basis is pretty advantageous right now. The clobbering of our Canadian dollar kind of helps out with that as well. And we've been rapidly, taking our interest rates down and kind of moving that differential between Canada and the U.S. To lower our currency's value. That kind of helps out on the cash side for Canadian farmers as well.
Are you a little surprised how the Canadian dollar has hung in there at the values that it is, just shy of 70 cents?
Yeah, actually, we cut interest rates just in the last week, I think, and we've kind of rallied into that. It might have been a little bit of a sell the rumor by the fact kind of play, but I mean overall, it's still a pretty weak loonie, and I think that the market is also. I think the market has priced in a lot of the weakness in the Canadian economy, but I think there's still kind of this wait and see mode on the US, right? There's still a lot of positive data coming out of the US. A lot of folks are still, calling for a soft landing of the US economy. I'm not sure I agree with them fully on that, but I think that there's just more negativity priced into the Canadian dollar right now than there is the US dollar. So if that happens, if we see that balance start to shift, we may see the Canadian dollar rally just because of the, more of the value of the US dollar than the Canadian dollar.
Yeah. Hey, Brian, if somebody wants more information on ICL, how do they get a hold of you?
We are about a few days away from launching our website, which is CanadianAgMarkets.com or Ireland Comeault Lafoy.com. Both of those will take you to our website. And we'll be launching a subscription service for our reports within days as well.
Yeah, great stuff. Well, hey, it's great to have you here on Real Ag Radio and look forward to our next market chat. Thanks a lot.
Beautiful. Thank you so much, Sean.